and welcome to B4TV. And today we welcome David Hall, the Chair of the Venture Capital Trust Association. Hi, David, how are you?
Morning, Richard, and thank you very much for giving me this opportunity to talk about venture capital trusts and how they work with UK small businesses.
No, it was, when the offer came along into the inbox, it looked very interesting and very sort of the moment. So I thought it would be a good idea to get you on and tell us a little bit more about VCTs and the work that they do with small businesses across the UK. So maybe you can start with that particular. I know I didn't phrase it as a question, but tell us a little bit more.
Yeah, absolutely. No problem at all. Venture capital trusts are about 25 years old. They're quoted trusts, have about £6.5 billion under management, and they invest in UK small businesses. Generally, we invest in about 150 businesses a year throughout the UK. Got a portfolio now of about 1,000 investments, and generally stay invested with those businesses for about 7 to 10 years. So we accompany them through their growth journeys, and in particular we hope that we can provide a little bit more than just money to help those businesses grow and scale. And typically the point at which venture capital trusts get involved with businesses is when they are 4 or 5 years old, employing sort of up to about 20 people, just getting going, just selling a little bit, and just about wanting to go and grow and scale their business, but maybe not always knowing exactly the best way to do that and how long it's going to take and what they're going to need. And that's the point we usually get invested.
So VCTs are one of many investment models functioning in the UK at the moment. What makes their work with small businesses unique, and what are the specific benefits to these businesses?
As I mentioned, Richard, we tend to provide more than just money, and I think their uniqueness is that they invest for quite long periods in businesses and continue to work with other investors as they come in and grow. So that in itself is, the length of time we invest isn't unique, but the combination, I think, of investment skills and helping businesses grow and develop their teams over a period of time, combined with the money, does provide, and the length of time that we invest in businesses does provide a degree of uniqueness, I think, across the UK. And we do invest throughout the UK. I think the Venture Capital Trust Association members, we've got about 15 offices, so we can invest everywhere from Land's End to John O'Groats.
Excellent. So what's a typical VCT investor?
Yeah, well, I think one of the other interesting things about venture capital trusts are the investors, and there's two things from that. The first is that all of the investors are UK based. So all of the money is from the UK, investing in the UK, getting recycled back into the UK. The typical investors, they actually fall into two camps. There's a first group who are the people who are investing, who are probably in their, I'd say, mid to late 40s, still building assets, interested in growing businesses, and investing about sort of £20,000 to £25,000 in a venture capital trust. They might only invest once with a trust, but that's sort of one sort of typical investor. There's another group of investors who are investing, and they're investing into their returns to try and get income, and they tend to be older. So you've got another group of investors who are probably in their mid 60s. They're investing a little bit less in the trust, generally maybe £10,000 a year, so only getting sort of £3,000 worth of tax relief, which I think. But they're investing again for the medium to long term. So you've got two very different types of investors. But I think the characteristic that often surprises people about that is that the amounts of money that they are individually investing are quite small. So the result of that is that the trusts themselves, although they've got significant sums available to invest, actually have a very high number of investors. So, for example, we've got probably now 12, where I work, which is YFM, which is one of the fund managers. We've got maybe 12,500 investors now, and there may be altogether across the UK, there could easily be 100,000 investors now, which is probably not something that people associate with venture capital trusts.
Interesting. And clearly over the past, what we know, we're nearly coming up to 2 years, aren't we? The length of the pandemic, you've helped a lot of businesses. But now, what do you feel are the real challenges that are facing businesses now, moving hopefully out of the pandemic and into a sense of normality, although that word's been overused and I don't think there'll ever be a normal again, will there?
I don't know. I think
not that it ever was probably normal before.
Yeah, I think there are many maxims, but I think one of those is kind of the only certainty is change, and I think that's certainly been the case over the last couple of years. So, but I do think in terms of providing certainty, that is one of the things that businesses and business owners and entrepreneurs hate uncertainty in many respects. It's a thing that it is very difficult to plan your growth and tiptoe through it. And that's been a real challenge. The sort of stop-start nature of things, the lack of clarity over how things are going to work has been a challenge over the last 12, 18 months or so. But what I think is interesting is as businesses have got to grips with what a lockdown is and restrictions are, actually the fact that once it happens for a second or third time, they've been much better at the planning. Today's landscape for businesses, though, there are, I think, different challenges you're coming through, some that we haven't seen for a while. So particularly you are seeing currently changes in the labour market at the moment and potential shortages of labour in terms of growing your business. If you grow your business, a lot of your business, you need extra people and you need usually more people quicker in a range of qualifications. There's a shortage of labour, and that's something that I don't think businesses have been trying to deal with. So that's a specific execution thing. You've still got the emerging trading relationship that's coming out with the EU, which I think a number of businesses are also trying to come to grips with at the moment. And then I think overarching all of that, which is one of those things that ultimately, in terms of the certainty for planning, is that businesses themselves like a steadier landscape, and B, that drives the confidence for businesses. And therefore the challenge is really about having enough confidence to be able to go and invest in your own business, to take those risks that entrepreneurs take all of the time, which are usually a considered risk, and actually to do that against that landscape. So that tends to be, the overall challenge. I think at the moment is it's very hard to be able to have enough confidence to take those risks in that sort of changing landscape of uncertainty. And we're still transitioning through out of pandemic into the other areas, and you're seeing these other things which haven't been seen for a while, in terms of, say, labour and to a degree perhaps even inflationary pressures coming to bear. So those, I think, are quite big challenges at the moment, which hopefully when you have an outside investor who's got a vested interest in your business, it gives you someone else to share the problem with.
Yeah. No, the businesses that we come into contact with, labour is a key issue, and obviously, the really vulnerable sectors, retail, hospitality, etc. You combine that with product shortages and delayed times on getting products into the shops or the businesses, it compounds everything. So lots of plate spinning, which erodes confidence at the end of the day, doesn't it? And takes you off focusing on the game in hand, which is running the business.
Absolutely right.
So from your experience, what else could we be doing to help grow our startup ecosystem and better support British startups?
I think, it's a big question. But there's a couple of things that immediately I think are in there. The first that we are always quite keen on, and there's a lot of comparison sometimes between the UK venture and US venture. But one of the things that I think the US does really well, that we're only barely scratching the surface of at the moment, is recycling effectively the human capital. So when people have run businesses and expanded their businesses, going back and then sharing those experiences with the next generation of people coming through, so that they can perhaps cut out some of their, some mistakes or see some of the hurdles before they've got to go across them, is really important. So the starting to recycle that capital and do it properly, and for those entrepreneurs to work with people like ourselves as financiers, because the UK scene, its financiers tend to be very financially orientated rather than both operators and financiers. And I think melding those two together, would be really, really helpful for UK PLC. And there's a second thing, which is that in raising money, although at the moment it's not a bad time to be raising capital, I think, for entrepreneurs, because there is quite a lot of capital looking to invest in the area. But it is raising capital in the unquoted arena is still relatively inefficient in the UK. It's nothing like as efficient as raising capital in the quoted arena. So entrepreneurs can often find themselves raising capital, on a regular basis, and it's like a routine. And sometimes if they look at the diaries and they'll say, right, over the last 2 years, how much time did I spend running a business and how much time did I spend trying to raise the money for it? Their balance is not always where they would like it to be. So if we can find a way of making that ecosystem more efficient and the capital raising more efficient, and particularly as you move from one set of funders to another, I think that would massively help, so that the entrepreneurs can spend more time then on the business rather than raising the capital for the business.
Yeah, interesting point. And how can you harness VCTs within this process?
Well, I think we've been around for 25 years, and I think the first thing we do is to try and do talks like this and ensure that actually we do understand the experience, and to a degree we can try and cut out some of the friction itself in terms of the raising of capital. And the other thing that we do is we often run sort of seminars that share our experience, not just with across our existing portfolios, but with other managers and entrepreneurs as well. So, and we're always inviting people along to come to those things. And those sort of things, if we can share those experiences, they can be helped better. Clearly, as well, from I suppose venture capital trust perspective, is that we always want VCTs. I said that we'd like them to be here for another 25 years at least. So we're hoping this is the first 25 years as part of the journey within that, alongside all of the other funding that's available for small businesses.
The recent budget, what was it, last week? It was 2 weeks ago now, wasn't it?
Yeah.
Demonstrated that levelling up is still clearly a priority in government policy moving forwards. What role can VCTs play in the wider political agenda of levelling up the economy?
Well, as I said, I work for a business called YFM, and the Y in YFM stands for Yorkshire, and quite a lot of the venture capital trust investors are based throughout the UK, as I've said. So one of the things that we have is a long history of investing, A, throughout the UK, and B, all the data around that. So we have some very powerful information which can show, kind of the speed with which businesses do raise capital, where they raise capital. And so what we want to try and do is to be able to use that effectively for levelling up. So as an example, when a business first touches a venture capital trust, I said to you that those businesses are generally turning over a couple of £1 million, 4 or 5 years old. There is actually a regional disparity. So the businesses outside of London and the southeast tend to take 2 more years to get to that stage than businesses inside London and the southeast. And in fact, they're about 10% smaller. And then when they take money from us, because we invest multiple times, actually London-based businesses come back for capital after about a year, whereas in the regions, it takes them about 2 years. So what we want to do is to use that data and say, look, whatever you try and do for the levelling up agenda here, let's not always try and make it one size fits all, because there might be some specific reasons. And it's that sort of thing that we can bring to bear that hopefully will help with levelling up. And personally, I'm the son of a butcher from Salford, so I've got a long history of wanting it to be working to be levelled up myself.
Isn't that the other side of the fence in Lancashire?
It was in Lancashire when it started. I think technically now it's Greater Manchester.
Got you. Okay. Brilliant. Well, I'm not sure you've been very thorough in telling us about VCTs. Is there anything else that you'd like to add? I mean, we'll certainly provide a link through to your website for more information and in contact details to get in touch if anybody's interested in finding out more. But is there anything else you'd like to add, David?
Yeah, in fact, there's just one point I would make about VCTs, which is probably different to most other vehicles that you will see. Venture capital trusts are open-ended vehicles. That's the technical bit. What that means is that we can genuinely be patient capital within businesses. And the longest that an investment's been held within a VCT is 20 years. So we can continue to back businesses as they grow. We can help them for over a long period of time, and we can genuinely be patient. And that's particularly important in small businesses, where the plan on day one doesn't always end up being the plan on day 58 or the plan on day 365. So the patience that we have, I think, fits neatly with the government agenda and also with the agenda of entrepreneurs.
Excellent. Well, fascinating hearing all about VCTs. As I say, if anybody's interested in finding out more, we'll provide contact details at the end of the video, and the details on YouTube as well and on the V4 website. David, thanks for joining us, and we hope to catch up with you again soon.
Richard, my pleasure. Thank you.